Lakshman, welcome back to F.A.C.E with your original work. What a great time to have you.
Hi, Dale. How are you? Good
Hey,
morning.
good, Lakshman. What a great time to have you with a lot of confusion about where the economy is at. And,
Yeah,
people are saying now we might skirt a recession.
sure.
Soft landing looks like it's a layup. Really great time to have your views to crystallize kind of a muddy picture.
Yeah, yeah. Well, thank you for having me on. It's great to be back with you. You're right. Tons of cross currents,
Yeah.
I would say, and as kind of strange and new and kind of never been seen before. All these things that we're seeing. The idea that there's a lot of cross currents around the onset of a recession is pretty standard.
Okay.
It's
Are you gonna
not
be
an
are you gonna be sharing your screen, buddy?
sure,
I
sure. Hang
know
on a
usually you
second.
have some visuals that you want to
Oh
share.
yeah, yeah, I can share.
Okay.
Hi
Oh, okay.
everybody.
How you
How are
doing,
you?
bud? Good.
Let me see. I've got all yeah, there's all kinds of stuff. Where do you want to go? What do
Well,
you want to talk about? You want to talk?
why don't we start with uh the Fed
Uh-huh.
versus the economy and the fact that we have this employment picture, but
Yeah.
manufacturing's in the tank.
Yeah, yeah, yeah.
So, all right, so we have this one sticky problem, right? That and yields to me, all right, here a picture speaks 1,000 words, so I'm going to share my screen here on
Sure,
yields.
but the more I think this whole like everybody got prepped for recession. Yeah, yields are they went down quite a bit and now they're back up a little bit, right?
Yeah, but I
Yeah.
mean, this whole thing looks corrective, and it
Hmm.
didn't give it up easy. Of course, if we drop under 330, there's
Hmm.
room.
Hmm.
But if we hold 3.5, I think we could see 380 again.
Well, look,
Why
inflation's in
why
the
can't we see new highs in yields, Lakshman?
why can't you see? Well, you might look. I this is ancient history, but in '08, in the first half of '08, the recession's underway. It starts in December of '07.
Okay.
Back then, it was kind of a mirror image of what you have now, in that jobs were actually weaker, but GDP was growing. And
Yeah.
because of that, everybody was focused on GDP, saying there's no recession. What are you talking about? Oil is going up. The charts you were just looking at would have shown uh, uh, Fed tightening priced in for 100 basis points by December of '08. And that's inside a recession half a year, right? So that's how far off you can be. Now, inflation was sometimes runs up inside of a recession. That happens. So we can, and that recession, to be fair, started off mild. It was a relatively mild recession because there's two things. One is it a hard landing or soft landing? That's the first question. We should talk about that right now. The second is, well, how bad is it going to be? And that's a tougher one.
Well,
And
Bernanke thought things were contained
yeah, yeah. I mean,
initially.
and so I'm sure there's a number of people who are saying things are contained now. And
There are.
I won't pick on them. I'll be polite. I won't name them, but there are there. And we would disagree. Now, one of the things I think to understand, Dale, is that all right. So we're looking at cycles. I'm the third generation of doing this. My mentor was the guy Jeffrey Moore who created leading indicators. So there's some institutional memory of looking at these cycles, and each one has a different story. And in this, I want to be clear that we were making our recession call last spring. It's a long
I
time ago.
recall.
All right.
Yeah.
Now, I think the and I'd be happy to if anybody has a different recollection, but I think most people kind of got on the recession bandwagon after the Fed started going fast. They started doing those 75s in July, and that woke up, a lot of market participants, and they said, okay, that means a recession. Now we've got to price one in. And, they did, right? I mean, all kinds of markets moved pretty aggressively. Um, And so now you have the prospect of the Fed kind of toward the end of its cycle, whatever you want to say. Either they're slowing down, they're going to stop, they might even turn, depending on who you talk to, right? But that embedded in that is the idea that the recession risk was predicated on the Fed. Like it was because of that there was going to be a recession. And of course, we were making that recession call earlier. So why were we doing that? Right? So we were doing that because of the forward-looking drivers of the business cycle. And it's not terribly unusual. They were goods-related drivers in this case that were that had gone to extremes. Remember, we're in the aftermath. We're in the, what do you call it? What's that? The air behind the turbulence behind an airplane when it's all kind of crazy. We're in the aftermath.
Oh, tailwind.
The tailwind or whatever
becomes a headwind. And
yeah, so we're in this.
I want
we're
to
in
just
this thing behind COVID. Yeah, go ahead.
Yeah, that we didn't have a strong economy prior to COVID. It's almost like COVID bailed out the economy with stimulus and kept the consumer going.
Yeah, I mean, I cannot answer everybody on FinTwit, and there's a lot of people who say things that don't make sense. And there's some people who just may not know. I was to that point. I was looking at a comment the other day where someone was saying that the 01 recession was caused by 9/11. And of course 9/11 happened. First off, I find that offensive because you don't want to give the terrorists that kind of power. Second, it happened just factually 6 months inside of the recession. So the recessions start, things happen, people remember them. There was a big bank the other day had a letter out where they had mentioned that the 07-09 recession, the Great Recession, you should get these basic dates right, started in May of 08. It didn't start in May of 08. In May of 08 is when the market realized, whoops, we're on the wrong side of this. But the recession started in December of 07. So here, the foundation of this recession is coming off of the extremes that we got out of COVID. We got crazy stuff in housing. We had crazy stuff in goods. And we all know it went too far. And that's going to correct. And as that's correcting, as we're seeing that correct, those forward drivers, they don't stop where you want them to. they kind of overdo it and go too far. And
they have their own momentum.
Yeah.
Right?
And so that's going on. And then on top of that, let's now pile on that. When we pile on that, it's not just the US, it's in Europe, it's in Asia, doing the same thing. Now let's pile on it further. They pretty much all missed the inflation cycle upturn. Let's just say that they did. They totally missed. That's the big that's the elephant in the room. Really, 2018 they missed it, and then they missed it again here. And so they're playing this heavy duty catch up, which they have to do. I understand why they have to do it, and that's just piling on top of it. And it's inconvenient, but that hits the economy with long and variable lags. So we're just now starting to get on the economic, that's different than the market. On the economic activity, we're starting to get the hit from the earlier rate hikes.
Yeah, so people keep mistaking what the market does to what the real economy is. And there are times of disconnect. Would you view this as a moderate disconnect or an extreme disconnect, or it pretty much is the market trading with expectations of what you're talking about?
No. The market, I'd say right now, the market, if we put words in the market's mouth, it is pricing in a soft landing or no landing, right? It's saying jobs are strong, so there's not going to be a recession, and the Fed is near the end, so that kind of reason for recession has been nullified. So now we can look across. Okay, there's a couple of people who weren't good managers, and they're kind of going to take it on the chin. But by and large, we're going to get the soft landing. Now, that kind of we've been calling that the immaculate disinflation. That's not how it works. It doesn't work that way.
It's a great name.
Let me show you. I actually let me share, because
Okay.
it's been a busy week. Let me just say that I've been talking with a lot of people. So excuse me for my messy desktop here. Here is a chart. I think it's kind of interesting. Because this is what's on Powell's brain right now.
Right.
And just to orient everybody, we're looking at the 70s. So that's an era of higher inflation.
Took 3 tries.
Yeah. So we're going from 67 when inflation was lower, right?
Yeah.
It's in the 3 handle, 2 to 3. You get into the 70s here, and we're showing the recessions.
Right.
And you see these swings up and down, those are your inflation cycles. And so when I talk about cycles or an inflation cycle turning point, that's what I'm talking about. And when we're talking about business cycles, it's just switching from the shaded areas, which are contractions in activity, and expansions in activity. So we're looking at 2 different things. We're looking at, you got the shading on growth, and then you've got a separate thing, which is a cycle in inflation. This red line is the average for the period shown, which is 6.9%. Okay. Now, back here, nobody cared about inflation. It was jobs, 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 right? So inflation runs up, you have a recession, boy, you got to be easy. It's all about jobs. Okay. Inflation starts to run up. We have oil embargo in here, but inflation's moving up cyclically first.
Before the embargo.
Oil embargo piles on top. You get the recession, comes down. A lot of pressure here. This is interesting stuff. This is tons. I know Burns takes it on the chin, and I think some of it is unfair, because the pressure, political pressure that comes on from Congress and the White House there is massive. Massive. And so you have more easy policy in here. We have the Iran issue up here in 79.
That was a commodity mega bull on steroids, which makes what we have seen here in the last couple of years look like a walk in the park.
Yeah, what did we go to 910? We were over, in COVID stuff, we're about this level. So this, but the point is, there's a cycle move. Yeah, there's a negative shock here that really blows it off. We have a bit of a recession. Volcker's in here now. Yeah. Okay, Burns is toast. Volcker's in here, and starts coming down. He eases. Volcker wasn't perfect, and on inflation, and it's sticky. This stuff is sticky. It takes this 81, 82. That is a year-and-a-half international recession. It's a nasty one. That is not a walk in the park. I would not call that a mild recession, this one here. Okay. Yeah. And also, by the way, so we can be in an inflation cycle downturn. Currently, we're in an inflation cycle downturn. It's been going on over half a year. So we're in an inflation cycle downturn now. And recessions will kill inflation eventually. They don't do it immediately. So first, it's hard to get an immaculate disinflation, number one. Number two, the trough in inflation doesn't necessarily come right away. It's eventually. So these are different cyclical characteristics, I think, that not everybody is aware of in how this works. Now, Powell excited everybody in acknowledging that we have goods disinflation. Okay. Yeah. And so for overall inflation is coming down. But of course, services is not, and wage inflation. And, I don't know if it's a verbal slip up, but on several occasions, he has said that he wants wages to come down. That's levels of wages. That's not wage growth. And, maybe he's talking quickly, or maybe he means it. But we have let's also turn to jobs. We have a super tight jobs market. What's going on? I heard the gentleman speaking just before about jobless claims in low again, right? So what's going on? How does this relate to a hard landing, right? People have been acknowledging that the unemployment rate is often at very low readings at the onset of recession. Okay, so that could be what's happening here. There's some other things that are going on, I think, that are interesting and that help explain the seeming disconnect between the jobs market and the recessionary outlook that we have. One is that we have seen this movie before. We going back to the 70s for a moment, when you have high inflation, relatively speaking, you have this so-called money illusion that can kind of seep into business managers' kind of thinking, because your top line revenue growth, it looks okay, right? Inflation's making it look okay. And so you're like, well, I've got that good revenue growth. They don't adjust it for inflation in their heads. It's not a natural thing to do. And so you're like, look, I charge 10% more. Nobody seemed to flinch. My revenues are up. Maybe my unit sales are down a little, or the size of my purchases are down a little, but my revenues are up.
That's what they care about.
Well, it's certainly distracting, right? It looks good. It sounds good. But when you get down to when you go to do the books and you're like, geez, how much of the product did I move, and how profitable was it? And when you start looking into that profits growth part of it, it doesn't look as good, right? That's that's getting dicier and dicier. And I think that's the thing that'll have to be kind of talked about or looked through in the coming quarter or two.
Lakshman, did we have anything similar to the Great Resignation in the 70s? Or is this unique to this period in history? Because the baby boomers bought their houses 40 years ago. They own them. They have pensions. They don't have to come back to the workforce.
There's this, I don't think we fully understand the structural shift that has occurred in employment. We know there's the baby boomer stuff moving through and they don't have to come back. We know that COVID did something material to the workforce and may still be doing something in terms of long COVID or people taking care of other people who are sick and so on and so forth. A lot of people not in the labor force that typically would be there. We know that there was kind of an interruption, let's say, of legal immigration, which is important for our labor force because our birth rate is just not great. It's not specific to the US. All developed economies
demographics
have the demographic stuff. I mean, it's really kind of Africa and India that have okay demographics, and everybody else is kind of going the other way, right?
So why is he trying to solve this problem with monetary policy?
He's not going to solve it with monetary policy.
Right,
it's not going to be. It's not going to be solved. And I think going back to Powell for a moment, you got to be a shrink a little bit, and I'm not a shrink, okay? But you kind of observe people. He says stuff like, he says, look, there's going to be a debate. This is what's coming, right? You're going to get jobless claims going up. You're going to get the unemployment rate going up. The unemployment rate is at 50-year lows, 3.4, right? And the senators from different states are going at Powell and saying, remember, your job is jobs. Don't get freaked out by inflation that it might be transitory or whatever. Just don't worry about it. And remember the cycle stuff I was showing, how it can kind of, you get lower lows in your cycles if you don't deal with it. There's plenty of things to worry about for structural reasons on inflation. Reshoring of supply chain, structural shifts in the jobs market where we don't have as many people to work. Productivity, we haven't even talked about productivity growth coming down. I mean, if you believe if you want to believe the numbers, and let's take them at face value. We have very strong jobs growth, and I think it was Hatzius said of Goldman this week. I don't do this work. We don't do the kind of guessing of the point forecast for GDP. We do the cycle directional calls. But let's take him. Let's assume that they know what they're doing. He's got a 0.4 GDP growth. Now, if you're adding that many people and that's your GDP growth, your productivity is deeply negative growth, and that's critical to profits growth. And even let's circle back to the Fed for a minute. They want to get to 2%, right? Let's say that is the true goal here. Wage inflation that's related to a 2% target, the Fed's target, wage inflation has to be about 3.5%. But that assumes, the assumption there is that productivity is running at 1.5%, and it's deeply negative right now. We're not where we assume we are. So that would imply that the target has to be lower if you want to get where he's saying. So all of this is to say that Powell, is he, if I had to do the mind reading of him and wonder if he's more worried about a recession or more worried about inflation getting embedded, I have to say he's more worried about inflation getting embedded. And I just see in the chat with the political component, he is going to get some serious political pressure. Maybe because he's got a pot of gold, on the side. He doesn't care so much about money, and he cares more about his legacy.
Right.
And if he doesn't want to be the second coming of Arthur Burns, and he does want to be the second coming of Oker, I don't know how it manifests here. We've got an inflation cycle downturn, but I say that, I don't see a pivot anytime soon. You're going to have the recession underway, and the market's kind of grappling with recession, I think, for there to be any kind of
well, in his legacy, if he follows through with an already weakening picture, his legacy, part of it will be a modern day Hooverville across the United States.
Well, he'll be vilified for sure. I mean, because again, remember, we're at 3.4% unemployment, and he's getting incoming fire right now.
Yeah.
So I don't know where you want the unemployment rate to go. When you go to the structural issues in employment, right? So you have people who've left the workforce, then you've got all that bottleneck stuff, the craziness that happens. So housing goes to the moon, tons of demand for housing. So construction worker unemployment rate is like something crazy. It's like less than 0.5% or something. I think it's like a bonkers number. It's crazy, right? And there is stuff in the construction pipeline, jobs that haven't been done. Incoming demand has plummeted. There is no incoming demand for new build. That's not really there. There's stuff in the pipeline where if you've got the worker that you weren't able to get during past quarters or past couple of years, you're going to hang on to them and finish your work. But when you look forward, what's my incoming demand? That's dropped off a cliff on the construction side, both residential and non-residential. I mean, there's a little multifamily stuff because people can't afford to buy a house, right? So those millennials can't really afford the housing affordabilities, even if it's improved a little bit with mortgages going from 7 to 6. It's not a game changer. So I think in construction, I would watch the construction unemployment rate as a front line of where this is going to start to move. And then in manufacturing, you also have some of that because you had a lot of those bottlenecks, a lot of backup in production. Now the components are in, so they're doing a little bit of building. But in both sectors, which are huge cyclical sectors of the economy, not even the forecast, the activity, the actual just what's going on is decelerating pretty darn
So
hard.
when is Main Street going to know they're in a recession, Lakshman?
Well, look, Main Street I think is feeling it. It depends how much money you've got.
Okay.
Right?
Like always.
If you're working, look, if you're working and living paycheck to paycheck, I think you are feeling it.
Yeah, you are.
If you've got some assets, then you're not immediately impacted by this. And but just to be clear, just to look, in a recession, what 8% of the people are going to really feel it and like lose their jobs or something like that in a regular kind of recession. It's not like this huge thing. Most people are like, oh, okay, that's a little tight. I see things around me that look weak. But you have industrial production levels are down, consumption levels are down. Okay, so
Yeah.
so when I'm working with clients, they certainly are hearing all the bull cases that are out there and watching the market go up a bit and saying, whoa, is there no where is the recession? Do we see it? And you see it in the consumption. The consumption has been actually
Dropping.
dropping.
That's a problem in a consumer-driven economy.
It is, and it happens. What happens is the service sector and consumption. These things, the deceleration, the slowdown that happens there. They don't. First off, they don't always contract during a recession. Plenty of recessions where they don't contract. They always slow down. That often happens after the recession has begun. So industrial production down, consumption numbers are down. Looks like GDP is going to be pretty weak. We understand why there's the labor hoarding. We understand why jobs are tight. I don't know if the actual number itself of 500 is right. There's always plenty of stuff in the details there, but eventually that washes out. So I do expect that sooner or later you are going to see jobs begin to contract. Probably not from service sector stuff. Probably from other sectors is what'll be driving.
You're going to be watching construction as the key.
Well,
to that.
it's one canary, but there's many. It's also in manufacturing. You've certainly seen some companies really kind of screw up. I mean, I think they Intel, right? They kind of whiffed it, and because they were just like, hey, we're going to keep adding people, adding capacity right into a downturn. That's not going to work. You're going to have to now. Other companies like TSMC, I think they're a little bit more. We work with them; they're a little more sensitive to the cycle. I mean, they've managed it really well. They've been able to kind of ride the wave instead of kind of get smacked in the face by it.
Yeah, I think that people think these are small cuts, but they are deeper, the more to the bone kind of cuts than people really think.
Yeah.
Microsoft, etc. So, we're getting into this time zone where I'd like you to encapsulate, if you will, your outlook. Why don't we do it with the standard analogy? Soft landing, hard landing.
Hard landing. Hard landing.
As an ETA.
Sooner rather than later. I mean, look, the way these things work, and people do not appreciate this. You're very lucky to see a recession when it's starting.
All right.
Everybody's a genius on Monday morning, Monday morning quarterback. Yeah. Like, it was obvious, and I'm sure when this recession is recognized, everybody will say that they called it. It was obvious. But remember that, 10% rallies as a recession is starting are normal.
Right.
This is that's not abnormal.
I'm getting some real nice comments about your narrative here.
Okay.
And maybe you could show your website, Lakshman, for people that I know you mainly handle large businesses and institutions come to you, but I think you have a product where retail people interested in your views on the economy could stay informed with your work. So
Sure, sure.
you just hit the share screen,
Oh, do I
or
have that up there now,
or I could do it. Let me.
here, I got it. I got it. I
All
got it.
right,
It's businesscycle.com
right.
is our
Website.
site. Yeah, that's our website. I'm sorry. I'm like,
It's
I
okay.
got you in a tiny screen. I got to get you in a big screen, and then I have to share it. Sorry.
It's okay. And there we go.
So this is actually, by the way, we're launching this site's getting launched today or tomorrow. So it might
Cool.
look a little different, but it's businesscycle.com. It kind of shows you different parts of what we do, the people we work with. So we'll work with like a big sovereign fund or a big industrial or a consumer company there. So like
Okay.
parks, I know parks have, they do well because everybody's been pent up, right? For a couple of years, you want to get out. But discretionary spending, look, discretionary spending is cyclical. So,
Right.
yeah, we need our phone, right? But do you need the latest iPhone right
No,
now?
you don't. No.
Okay. So that's
Yeah.
the thing. So that once you're that big, you can't hide.
Right.
So that's the stuff that we have to deal with. And since I have you here, I want to show just one other chart very quick to drive home.
So I mean, that iPhone argument you bring up is another stress on consumption.
Yeah, these are the things. It's
Yeah.
just
That's what
gonna.
we're just going to have too much stuff except what we eat and need for to drive and to heat and cool our homes.
I might have
Just the
showed you.
necessities.
Yeah, so well, certainly. So all it really takes, right, is a deceleration in consumption, which happens inside a recession,
Right.
to kind of kick it. We're
Yeah.
already having it in housing. We're already having it in manufacturing.
Yeah.
Services, we've got it. We had pent up demand for services. Okay. And maybe there's a little more of that. There might be a couple more months of that. And then the deceleration kicks in. When services kind of just flattens, the other parts are contracting, you got a recession. This is 21 countries. I just want to show you. That's a forward-looking indicator that's very recessionary. And it's just coming off its lowest lows because it's not decelerating faster, right? So,
Okay. You're not showing it, Lakshman, and we'll wrap it with this look.
God,
That's okay.
I
So
thought I was sorry about
you're
that.
showing your clients, which are
There, this is
Fortune
the one.
500 companies.
Here,
Okay.
can you see this now?
Yeah, we got it.
Yeah, so here's a forward look globally. Just coming off the lows, meaning a little less bad in the growth rate. But when you think about the math, it's the index level that's the key thing. So the level is still slipping. It was going down really fast, and now it's going down a little slower. So that's the forward look. There's no recovery in sight yet. This is globally. Now, typically, if this is going like this, in some way, shape, or form, the central banks start to figure out, hey, we want to loosen up a little bit.
Yeah.
And so here, when this is coming down post Great Recession, they really want to be first they're tightening, then they turn around and they slam it down. They all turn around, and I forget what this was. They had so many marketing names for what they were doing. In 2011, was that Operation Twist? Maybe.
Maybe Chubby Checker.
I don't know what it was. So here we got to think of a new name because it's coming. Okay, they are going to turn, but my God, are they late?
Yeah.
And that has a lagged impact on the cycle.
Economy. Yeah.
Yeah. So that combination just is going to weigh on things, and so. Yeah, we've got a rally. Yeah, we have some hope that there's a soft landing or no landing or an immaculate disinflation. Is it impossible? I'd never say never. I have not seen anything like that. We don't see anything in a couple hundred years of cycle history that suggests that. The big picture stuff that we see about cycles suggests definitely first hard landing, and second, I wouldn't rule, I can't say it'd be a soft recession.
Okay. All right. So we really thank you. Your
Thank you.
view is you made your point, and great discussion. I really enjoy our conversations.
Thank you, Dale. I love coming on and the back and forth, and I'd love to get into some of the comments that you guys have, but we'll do it next time.
We will, and we'll do it soon. Lakshman, follow everyone. Follow Lakshman, everyone, at Business Cycle. Go to his website.
Yeah, we're on the website, or we're on Twitter, or we're on LinkedIn.
You know what we have in common, Lakshman, before I say goodbye? You and I both live in the future.
Oh, yeah.
I'm always projecting where I think Mark, and you're always projecting. We don't have to go back to the future because we live in the future.
Yeah. No. I go, time is a tricky thing, right? Forecasting, thinking about time is a really interesting thing. Not everybody's used to that. Yeah. Thinking about time. It's maybe some options traders are.
Yeah. Time erosion. It's our most valuable currency. Anyway,
there you go.
Thank you, Lakshman.
All right. Thank you. Have a great day.
All right. You're welcome, everyone. People are thanking you, Lakshman. And
thank you, everybody. Thanks for listening.
And you could join the team in 6 minutes on the Morning Edge. Remember, don't just count your graphs, count your blessings. See everyone tomorrow. Thank you, buddy.
Bye-bye.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.